Hello guys, and welcome to the White Rabbit Trading Channel. Let's dive in. Last time we looked at price, it was hovering around the previous all-time high. At that point, we were focused on a few key levels, mainly support, since the structure was still to the upside. I was watching for the high to be taken, and if that failed, then for a move down to the next lower support level. What we got in the end was a small bounce. So there was a reaction, but price didn't manage to make a new high and instead formed an SFP at that level. That left behind a poor high, which means we still have unfinished business up there. So that remains one of the targets moving forward. Since then, price has moved down to the next support level, and we saw a bounce over the weekend. So, what do we have locally? The daily trend still remains intact. We bounced from the 5-day order block, which we had already marked as support, and I'm still holding a trade from that level. If price comes down again, I'll be watching closely for an SFP or a deviation. Only if that level gets broken impulsively will I consider a potential bearish SR flip, at least temporarily, as the weekly structure remains bullish. Currently, we're in a range, and we've seen a bearish break on the 4-hour chart. That means any move up from here could potentially form a lower high or an SFP of the swing high. However, if this level gets reclaimed, it opens the door for more upside, targeting the poor highs and possibly a new all-time high. So overall, not much has changed. Market structure remains corrective until proven otherwise. From an Elliott wave perspective, this range also looks like a 3-wave corrective structure. And since the 0.886 retracement of the range has already been touched, the probability of taking out the high increases, adding extra confluence. As long as structure remains bullish, the 0.886 retracement level tends to play out more often, as we've seen repeatedly during uptrends. This lines up well with market structure. Because here's the important part: while Elliott wave can offer additional insight, I always use market structure as the base. Elliott wave actually depends on market structure to define its waves. So for me, structure comes first. It's objective, reliable, and tells me exactly where price is in a trend or range. Elliott wave is an extra tool for context. And as of now, both are still pointing to the same conclusion: this range looks corrective, and as long as the key structure holds, I remain bullish. Now for some intraday trades. We have a few local levels that I'll be watching and trading based on reaction. Personally, I'd prefer a bit lower for a new trade on the higher time frames, but there are potential scalp opportunities. Locally, we're also sitting at some resistance, but for now, I'm not interested in new trades. I'll wait for the Monday range to form before making my next decision. I updated everything during the morning routine stream on Patreon. Let's have a quick look at the averages for today. We can see the average gain aligns with the 4-hour swing high, so if price comes up there, I'll look to take some profits on the long. Also, one of my personal strategies triggered a trade. I have a few strategies, but this one is purely mine. I haven't seen anyone else use it. Maybe some do, but I'm not aware of it. Either way, it triggered a long from Friday's low, with the target set at the 4-hour swing high. Now, if we look at the statistics, this strategy isn't perfect. It can sometimes catch the top, especially during a larger washout or in a bear market. So yes, there's always a risk of getting stopped out. But what makes it useful is that once it triggers, the target usually gets hit even if the trade ends up as a loss later. That makes it a great confluence tool in an uptrend. It works especially well on range lows and during trending moves. For example, if we look at the start of the bull market, this strategy had a 100% hit rate across different time frames. That gives me extra confidence, or at least a nice confluence when planning trades. I'll post this strategy soon for testing so others can try it out. By the way, this is not the copy trading strategy one use, just to clarify. So what do we have? Right now, we have bullish market structure and an uptrend. The internal waves inside this structure point to a corrective move, and some statistics support a potential higher move sooner or later. That's why I'm focused on long setups. Now let's also take a look at some key statistics. For example, the one I mentioned at the monthly open related to FOMC stats. Historically, we usually see a reaction around 5 bars before or exactly on the FOMC date. I've been watching where price will be during these dates. We already had a strong reaction on the previous key date we marked, and now we're slowly approaching the FOMC itself. I'll be monitoring closely. If we get a reaction, I won't blindly take a trade. It needs to hit one of my levels and ideally shift structure. In that case, I'd look for a short. If we move down, I'll look for bullish price action to go long. Looking at time cycles, for example, the daily cycle, we've already passed the 60-day mark. If price comes down, this adds confluence for a potential low forming around this area. Let's now quickly revisit the monthly statistical levels we marked. Level-wise, Bitcoin hasn't hit any of the monthly averages yet. One of them sits at the all-time high. The average bullish close is around 120K, and the downside wick target hasn't been touched yet either. That one sits around 96K. In terms of time, the average time for forming the monthly low is already passed, and so far, the low formed within that expected window. This could mean the monthly low is already in. If price moves lower and closes below it, then we may get a bearish monthly close. Until that happens, I'm looking for a potential SFP at that level, but I'm also prepared for a longer range this month. Looking at the average timing for the high, it was formed within the expected window as well. The next high window lines up with the coming days and also aligns with the FOMC date. That suggests even if we get a push up, it could end in an SFP, deviation, or just more ranging. This supports the idea of continued sideways movement. Of course, this idea gets invalidated if price breaks out of the range impulsively. Until then, I'm focused on the highs and lows of the range for trade setups and some intraday trades if we get clean signals inside the range. It's important to remember that the best trades often come from the range extremes, not the middle. However, clean setups inside the range can still become runners. I'll continue updating if something big happens. As always, I try to post before major moves. If you're interested in more statistical charts, or if you want to support me or learn some of my strategies, feel free to join the Patreon. You can ask questions in the community chat. I do morning routine updates where I go over how I prepare for the day in detail. All of this is available for €25 a month, which is about $1 a day. You'll get access to educational material, upcoming content, and some of the strategies I use. If you have questions, I'll always do my best to answer clearly and we go through the process together. Or if you simply want to support what I'm already doing in Discord, you're more than welcome. It motivates me a lot when I see that people are interested. That's what keeps me going and happy to help. Now, in the end, let's take a look at momentum. Weekly momentum closed down but is still inside the bullish control zone. Pressure will remain to the downside unless we close above 111,500. 10-day momentum is up and likely to stay up into the next period. It would need a close below 92K to cross down, which is unlikely in the next few days. But keep in mind, the next open will bring this signal much higher, so we'll revisit it. 5-day momentum needs a close above 110K, basically the same as the weekly. This adds confluence in that zone. Best case for bulls would be a range or a move up, if not, downside press. Your increases. 3-day momentum is down and needs a close around 109K. Same for the daily. So, if price fails to break higher, that adds confluence for at least continued ranging. Then we'll see how strong the pressure becomes at the range lows. The longer we stay here, the more momentum resets, and that favors the bulls. Of course, this would be invalidated if we get a strong push above the key level we've been watching. And as you can see, It's the same level we already marked earlier, so that adds extra confluence. Personally, I would prefer lower, but my bias is still to the upside. I'm already positioned, so I won't miss the move. My invalidation is a break below the current range, and for some strategies, the invalidation is a break below the weekly swing low. And for the day trades, we go step by step. Okay guys, that's all for this update. As always, I hope it was helpful. Stay safe, and I'll see you in the next one.